The triple witching day has happened. What can we look forward to for next week? We're going to talk about it in this video. I am Dr. Stock, Doctor of Education, and I was going to tell you a joke about a sheep, but I decided that it was too bad, so I'm not going to tell it. The triple witching day has dragged the markets down. We're going to take a look at what happened and talk about what that means going forward from here. I will tell you in this video how to get up to 16 free stocks using my link down in the description, and also my Patreon where you can see my buys and sells and see how I'm capitalizing throughout the markets, and also about my options course that I'm developing over at that Patreon. For right now, I want to stick to the market. So let's go over there and talk about them. And the very first one that I have for you is ticker symbol DIA, which tracks the Dow Jones. So here's that chart for you, and here's what I showed. And the thing that I want you to pay attention to right here is this candle and this blue line, this real thin one that's coming up through here. That's the 50-day simple moving average. And we have broken back down below that. However, on the Dow Jones, we haven't broken this longer term downtrend that we have happening. And so for right now, with the RSI sitting right at about on 50, we're really don't know exactly what's going to happen. We have signs pointing that this could be maybe minorly bearish for next week. Should we break down below this trend line, we could certainly expect more of that. Let's go over to the SPY for a little bit more clear signaling. Now here we did break down below our trend line, solidly down below the 50-day, which means that now we have that 50 as resistance. So 445, that's almost 446. Those numbers, 445 to 446, those are the numbers to break if we're going to go back up into bullish territory. And you could argue, I would accept the argument that you could redraw this trend line to also include that. However, I liked it where it was sitting before. I think that that's a really good representation for what we have, and that high volume day that we have with that sell-off, that I think that that's going to be a very high conviction play that we have in the RSI dropping down below 50. And I think that's something that's going to turn us a little bit bearish on next week, at least leading up till Wednesday. And then we'll talk about the market catalysts that go along with it in just a moment. So for the SPY, with that high volume day that we had on the quad or triple witching day, depending on how it is that you want to phrase it, triple witching, it turns out, is the proper way to talk about it, with all the options contracts closing out and futures contracts closing out and everything over $3.4 trillion worth, that we had that sell-off. And it is possible that we give back a little, although I don't think that we break that 50-day, although I do think that we have a net downward movement at least until Wednesday, and then we see from there. It is historically the case that the week following the witching in September can be a softer week, and after the run that we've had, it is possible that we start to see a little bit more softness in the markets, and we see that decline, maybe giving up a couple of percent in the process. And we know that that creates buying opportunities, and we most definitely did capitalize. As a matter of fact, I will tell you on this next one, which is QQQ, what I did to capitalize on this position. So I expected a bearish day in the markets. I saw us break down below the trend line, and I also watched the RSI cross back over 50 into bearish territory. So what I did was I jumped over to TQQQ, and I bought a put option against that. And then I went up, I have it written down here, 27% in a single day. As a matter of fact, I had to wait 2 hours to make 27% gain on my money with that play, just by doing a little bit of homework ahead of time and really watching that. And I'm going to reevaluate my position on Monday as it comes up to see what else we have going on for us. So I do think that we could still get that softness in the S&P, in the Dow Jones, and also in the NASDAQ that we have here, tracking the NASDAQ 100 with QQQ. And for this one, that 50-day, it's currently sitting right at about $373. So right now we're at 370. So we could possibly see 0.75% up, a little bit of a give back on Monday, and then Tuesday could be that bigger day. Same thing for the S&P. Now, how far could it fall? Well, I think that we could see maybe 2 to 2.5% down from where it's at right now. So let's talk about some actual values on that. So I'll grab this tool right here from this part of the desktop Moomoo app, and our price was almost at 371. We'll call it there. And 2% actually lands us, almost 2%, lands us about 363 at the bottom of these candles. And then maybe we reevaluate from that point. And if we get a really rough go of it, I think that the ultimate low that we would hit would be a 3.5% down, which would be a very, very ugly and bloody week. And it would put us at a critical point in the market where we might fill out a head and shoulders pattern. I don't know that we get that. To the upside, should we break that 50-day, then we have resistance sort of all throughout this. So resistance coming in at about 373, 375, 377, 378. So just a tangle of that. I don't think that we experience nearly as much upside next week unless we get some sort of major and unexpected catalyst coming up in the markets. Now, I've been using the Moomoo mobile app to do my options trades, and I'll tell you what, I absolutely love it. And using my link down in the description, you get up to 16 free stocks. Here are the deposit levels that go along with it. Each stock is valued up to $2,000 a piece. The $5,000 deposit level, by the way, also includes a free share of Tesla or Google, so you'll absolutely want to check that out. And then also pushing further value is the Patreon link that you can also find down in the description, where I post my buys and sells and where I have my economic projections, and I also have my earnings forecast and stock price predictions for Tesla and Nvidia. I will be polishing up the Tesla Q3 earnings prediction very soon. And then also what I'm most excited about is the options course that I'm building out over there that starts from the very beginner. You don't need to know anything whatsoever about options. It starts that simple, and then it will go all the way up through advanced trading strategies. All right, I want to go over to the economic reports, and then we'll talk about a little bit more about next week. So we're looking at Friday. So this is the day that just happened. So when we look at this, Michigan consumer sentiment has fallen from the previous month. And then some other things that we have. So consumer expectations that we have also about even from the month before. Inflation expectations, this was actually a very bullish thing, have dropped. So from 3.5 previously down to 3.1, and that's looking at long-term or year ahead inflation, and then longer run inflation going down from 3% down to 2.7%. So that was very good for the markets, and the markets did rally for about 10 minutes or so before selling off following that news. So that was good for us. The big thing, the thing everybody's waiting for, is that Fed interest rate decision at 2 p.m. Most likely we'll get a pause, and that's what consensus and forecast is all about, and what we're at before that we stay at between 5.25 and 5.5% for the federal funds rate. This, I think, is the bigger thing, the summary of economic projections that we get from the FOMC. And the reason that I think that this is so big, besides Jerome Powell talking, that can have its own impact, but looking at where the terminal rate is, the federal funds rate for the end of 2023 will tell us about November and December's meeting. Can we expect those rate hikes to happen? Because if it comes in that they're looking for 2 rate hikes between now and then, that I think is going to impact the markets negatively. And so we most definitely want to watch for that as a negative catalyst. If they say 1 more rate hike before the end of the year, then that's something that I think the market expects. I don't think it reacts very much from it. And then if it says that we're done rate hiking, if it indicates that where we're at right now is where they see the federal funds rate ending at the end of 2023, that can be upward pressure for the markets. And then the next biggest thing that I think that we really see from it is looking at where that year ahead number is for the target rate, the end of 2024, that we see what that higher for longer means, get them to shed a little bit more light on the trajectory that they expect, even if they don't know exactly what's going to happen. So to summarize this thing, I think next week could be a downward pressure week for us. I think that we see a little bit more red in the markets. We'll find out if that's right or not. And I think especially leading up to Wednesday is when we see that happen. So between Monday through Wednesday up until 2 p.m. when we get the Federal Reserve's interest rate decision, then we get the summary of economic projections. Then at 2:30 when Jerome Powell comes out to speak on Wednesday, and that is September the 20th. And then from there, we'll just really have to see, do we continue in a red direction like I think that we can, or is it something that we recover from thereafter, and maybe we even end the week even? We'll have to see. But I do think that next week between Monday through Wednesday that we see that downward pressure, and then from Wednesday we'll see if that's something that continues for us. Don't forget about that jobs report that happens on Thursday as well. I got to let you guys go. Don't forget about your free stocks from Moomoo. Get a hold of that trading platform. I'm telling you, it's top notch. Absolutely love it. And then also that Patreon link down in the description as well. Come on over, join us, see what I'm buying and selling, be a member of the community. Absolutely astounding people over there, and I couldn't be more grateful to have them. And then thank you guys for sticking around throughout this video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.